morning. Let's broaden out the conversation back into the broad market with Mr. Alan Nuckman. He's the Chief Market Strategist at BullseyeOptions.com. He's got a trade for us too, but first we have to celebrate. Alan, you were looking for S&P 5,000, I think, like a year ago?
Yeah, it's just momentum, and I don't know where to call the top. That's not my job, and I pity the guys that try and pick that turn in that top because that's impossible. Technically, I'm still looking at S&P 6,000. You take that 1,200 points on top of that drop, and on top of that old high, and it's S&P 6,000 is the next target.
All right, so up and away we go. Anything that can get in the way, to your point, you're not in the business of calling tops. What do you look at to know if momentum fades? Like, how do you figure out on the margin if a ripper's slowing down?
Well, I think a slowdown and consolidation is always good. And then you can use that. It's a buy a dip market. Obviously, you've seen how things have changed. But I do like Ben's caution with oil. I look at that as a positive. If we get above 80, that's going to help out all of these energy stocks that have these low PEs that have a lot of catch up to do. So that's going to help the overall market in general. And you got to remember, we were at 100 for 5 years back in the 2010s, and the S&P gained 300%. So, it's not that high oil prices are necessarily going to, depress the market. We're still getting gas less than $3. Let's just enjoy it while we can.
All right, nice. All right, speaking of gas, your trade this morning, you're going into Ford. Interesting pick, because I know you like to find sleeping giants that will awake. Right. Ford's kind of been awaking the last 10 days.
Yeah, it started to spark up. Now, this is a stock that's 50% off its 2022 high. So Fords are 50% off. The PE is 6. So just common sense, and being a Michigan guy, Michigan State actually, UAW, the whole deal. Ford, I believe in America. It's been between 10 and 15 for 2 years. So break out of that range target's 25. We're above the midpoint at 12.5. So that should send us to the range top, and then look for a pop. So there's a lot going on in my indicators. My money flow indicator has seen a lot of leverage long buying, and we also had bullish divergence in November. So there's a lot of positives for a small dollar stock to reflate once again.
Okay, all right, nice. Little college bias there, a little hometown, pseudo hometown.
Yeah. Well, I'm a Michigan guy. I grew up in a mining town. We mine the iron ore that we send down to make it into steel that turns into cars. So it's vertical integration for me. So what I'm looking at is the January 2025. So
you are a guy that asks how or why, just in different categories.
Right. So I'm looking at the January 2025 call, a $10 call. So that's the low, buy at a $10 call, deep in the money with an 80 delta. So it's trading for about $3.25, $3 right now, and it's $2.75 in the money. So the expiration break even is less than 50 cents with a year of time. Now, I could have bought the June or July option, but it's only $25 more to buy more time. And as I always say, buy time to be right. I'm not going to bring up a stock, but we talked about it over and over and over again, and I had a June option in it, and I think it ended up doing well. So June seemed like a lot of time at when we discussed it, but obviously you can't have too much time.
I think you're referencing your Palantir trade there,
I think you should mention it, yeah.
I think I just did. All right, so Ford here is a cheap stock, so you can get a lot of time on this without breaking the bank. You do this trade in Chipotle, you're going to spend like $5,000.
Right, exactly. So that's the attractiveness. It's as much of how you trade as what you trade, and the expiration break even is 50 cents higher. Now, it's boring. It's not exciting. You know what is exciting? Making money. So this is very akin to, we did a trade in AT&T where we bought a year out option, and AT&T finally found some life, and that option gained 50, 75% rather quickly, even though we didn't need all that time. Why not? That's the downfall for options traders. They usually buy too little time, or they buy the out of the money, low probability options. So let's put the probability on our side. And this is a nice chip that we could just wait on. And, Ford, like you said, is starting to look good. The PE is 6.
Like it. Yeah, it is. relatively low. But within the category, take Tesla out of the equation. It's kind of where they trade at. But Ford looking, I think, the best out of all the autos. I think it is. Just technically. GM kind of stuck around that 40 bucks. They did pop on their earnings too, but Ford making higher highs going all the way back to September. So I think trend is your friend in this case.
And you all know how sentiment works. This is a stock that nobody was in love with, and
yeah, that's true.
And the sentiment had shifted in November. It was bad enough to buy, and again, it's all about risk reward. You got to find stocks now. I'm not jumping on Nvidia at 700, even though it could easily get to 1,000. Just because the risk reward is not the same. I won't sleep as well as I will with a January 2025 Ford call as opposed to actually trading Nvidia. That requires laser focus and super money management discipline, whereas this is more of a sit back, let it, forget it, let it and forget it, whatever they say.
I love it. Yep, I got you. Set it and forget it. Let it ride. Something like that. I appreciate it. Alan Knockman, man. Chief Market Strategist, bullseyeoption.com. All right, with the long in-the-money calls for Ford. Chart is looking pretty good for compared to pretty much everything else in the group. Interestingly enough. Definitely a better looking chart short-term than Tesla. Let's talk macro charts after the break. John Kosar from